Over the past 3 years, we've seen the development of the biggest car price bubble in history. And now we're about to witness the biggest car price crash in our lifetime, according to the experts. With a flood of supply hitting the market at a time consumer demand is rapidly cooling off, elevated prices are unsustainable. That's true for both new and used cars. The collapse has already begun. In fact, today we've listed some models that have already faced massive price declines so far in 2023 and have compiled some revealing data and some brutally honest forecasts about the auto market crisis that's now unfolding all around us. But before we move on, we humbly ask you to support our work with a thumbs up and don't forget to subscribe so you don't miss our upcoming videos. For over 2.5 years, the average new and used car prices kept climbing, assisted by dealer markups. The limited availability of semiconductor chips slowed down production, while demand for cars continued to outpace supply and maintain vehicle prices at record levels. But that scenario is vastly different today. Microchip shortages have eased. Automakers are ramping up production to maximize their profits and to finally meet consumers' needs. At this point, we've more than likely passed the peak of prices, but the fall we saw so far is nothing compared to what's coming next. All over the country, wholesale prices are going down, with experts at Manheim Consulting estimating a 9% drop for new models and a whopping 26% decline for used cars. Over time, sinking wholesale prices result in retail prices reducing accordingly, the firm notes. In April, for the first time in 20 months, the average price of a new car was once again below sticker price. Data provided by the firm also shows crazy high prices have become unsustainable. Between January 2021 and January 2023, used car prices rose by an impressive 52%, while new cars rose by almost 28%. During that same period, the median household income in the US saw a 13% increase, but that figure isn't inflation adjusted. When considering the average inflation of the past 2 years, we actually have only a 7.1% increase in incomes. This means that in the past couple of years, used car affordability went down by almost 40%, and new cars became 15% less affordable without accounting for inflation. In such an environment where buyers are being priced out of the market en masse, a crash is due. The question is merely when, the analysts have warned. We can already notice that a significant correction has started to unfold, but we're being told that the collapse that's ahead will be unlike anything we've ever seen, even worse than what happened during the auto market crisis of 2008. Easing supply chain pressures are helping to rebalance supply, but the thing is that we're moving from a situation of no supply at all to a flood of inventory. That means the values of many vehicles are plummeting much, much faster than anyone anticipated. A recent report from UBS estimates that global car production will exceed sales by 6% this year, leaving in excess of 5 million vehicles that will require price cuts to get sold off of car lots, Yahoo Finance reported. Right now, automakers are preparing for a price war, and some of them are already slashing prices. Given the bullish production schedules, we see a high risk of overproduction and growing pricing pressure as a result, UBS said in a note to clients. The price war has already started unfolding in the EV space, and we expect it to spread into the combustion engine segment during the second half of 2023. The biggest example of this is Tesla's latest price cuts for its new cars. The Model X lost over $14,000, or 23% of its value, since the beginning of the year. The brand's used car prices are falling too. For instance, used Model 3s seem to be taking the brunt of the ongoing downward trend, with their average price falling by $11,275 from $51,251 to $39,976 last month, according to iSeeCars.com. Similarly, in 2022, the average price of a used Infiniti QX80 came in at $52,874. 1 year later, however, the big Infiniti SUV's average price on the used car market is down nearly $12,000 to a reported average of $41,094 in April. That is a 22.3% plunge. Nissan's take on the Infiniti QX80, the Armada, has faced a sizable price decline this year. While the used version typically cost $41,771 last year, these days, used versions of Nissan's full-size SUV reportedly wear an average price of $33,300, marking a 20.3% price decline. Moreover, used versions of Land Rover's mid-sized Discovery SUV currently wear an average price of $40,841, the researchers reported. 1 year ago, though, a used Disco wore an average price of $50,973, so it's going down by 19.9% so far. Other popular models that are about to experience major reductions in price include the new Nissan Frontier, which now costs around $39,833 and is expected to drop to $27,146 by the end of 2023. Volatility will be even higher in the used car market. Researchers forecast that a 3-year-old Toyota Camry that's selling today for $27,404 is going to cost $16,548 before year's end. The same applies to popular used SUVs, including the Jeep Compass, from $25,605 to $15,706, the Honda CR-V from $30,193 to $19,599, and the Toyota RAV4 from $32,056 to $20,534. For all the people who bought one of these used models in recent months, the outlook going forward won't bring them any relief. While the corrections that occurred up until now are quite remarkable, it's important to note that used vehicle values increased by a whopping 88% since 2020, so they should brace for some pretty brutal declines in car values in the coming months. On top of that, when consumers drive a car out of dealerships, 10 to 20% of the car's value is lost immediately, which can make losses even greater. Worrying repercussions are sending shockwaves through the auto market right now. The unjustified froth in equity market prices is disappearing with prices plummeting, leaving some investors and consumers with less money to spend. Increased pressure on disposable income is putting Americans in a really tight spot. Consumers' disposable incomes rose in 2020 and 2021 as the pandemic caused debt forbearance, stimulus checks, and better unemployment benefits. But today, a lot of buyers who benefited from these programs are now defaulting on auto loans from 2020 and 2021. According to Barron's, the United States has been experiencing a disastrous surge in repossessed vehicles. Auto dealers are reporting repossessed vehicles going to auction, and the buyer's loan-to-value, or LTV ratio, is over 130%. However, that is a conservative estimate. Barron's cited one dealer quoting ratios at 140%. Now, LTV, loan-to-value, that's the loan amount versus the value of the actual vehicle. In other words, buyers are defaulting on car loans of $26,000 on vehicles worth only $20,000. That's an LTV of 130%. In its most recent earnings call, financial services company Wells Fargo also reported a higher loss ratio from auto loans. If supply continues to rise, and push prices lower. A new Land Rover bought today at a considerable premium will hold only a fraction of its value in 5 years, as it will have depreciated in line with its sticker value in a normalized price environment, and not retain the exaggerated price at which it was bought. Put simply, a lot of people will lose a whole lot of money. But hey, government officials say there's a silver lining in all this. The car market crash will at least help to bring the inflation they created themselves under control. It will be a breath of fresh air for consumers, they said. But for those who signed extended leases at expensive interest rates, the result will be quite catastrophic. Earlier this month, even J.P. Morgan released a study forecasting that average used car prices would hit $21,000 by midsummer. Cox Automotive Jonathan Smoke agrees with the bank's prediction. By mid-year, production should start to stabilize and improve, causing monthly payments to become more attainable as prices come down, he said. Grant Piper, sales manager at Tom Dinsdale Chrysler Dodge Jeep and Ram, says this is already a reality in his area. What I see in this area across the board, it's a sharper drop than dealers were expecting, he noted. Chris Frey, senior manager of economic and industry insights for Cox Automotive, believes it's all downhill from here. During the financial crisis, we had 16 months of annualized declines, averaging 5.8%. That's very consistent with what we're seeing now, he said. New and used car prices likely will continue to decline through most of 2023, added Pantheon Macro chief economist Ian Shepherdson in a recent note, pointing out that automotive prices rose faster than homes and have much further to fall as supply chain concerns abate. In a note to clients last month, Goldman Sachs economists also said they expect vehicle prices to decline for consumers, highlighting that the car market is entering a severe recession. Sales volumes and car prices are falling sharply not only in America, but all over the world. Never before in history we've seen the value of cars shoot up by 88% in a span of just 3 years. It's safe to say that the coming collapse will be just as extraordinary. All asset bubbles are bursting, with stocks and housing leading the downward march. Now, signs of a car market crash continue to emerge, while unpredictable, volatile outside factors threaten to make things even uglier, especially if we fall even deeper into a recession. The safe bet would be to continue to protect ourselves during the storm and let the tsunami pass before proceeding. Just as in equity markets, a correction in the U.S. car market is long overdue. By now, all we can do is to hope it will happen sooner rather than later, injecting sanity into the market and preventing this crisis from snowballing into something even worse in the months ahead. Billions of dollars in car values are likely to be wiped out in 2023 and beyond. This is just the tip of the iceberg, and with an economic downturn at our door, this ship could sink in the blink of an eye. Thank you for watching.